Anglo's CEO, Duncan Wanblad, joins us now. Duncan, great to speak with you this morning. Is that how I should be reading what we're getting here? You guys are obviously trying to fix the problems in these two key areas. You're taking a lot of action right now to try and stabilise the ship. Are these numbers maybe a reference to the fact that you are able to do that you're getting back maybe more on an even keel?
Morning, Guy. Yes, look, I hope that would be true. Without a doubt, as you said, the biggest impact to earnings in the business from last year to this year has absolutely been in demand for diamonds and prices for PGMs. That really does put quite a lot of cost pressure into the business on top of the normal inflationary issues that we saw during the course of last year. And that has required quite a lot of self-help in terms of making sure that we get on top of those things and protect the balance sheet, which I think there is some very clear evidence that we are onto and already making some great achievements in.
Duncan, how hard is it to contain inflation within the mining sector right now?
Yeah, there are normally two types of inflation in mining, guys. So the first of those is just the natural inflation associated with the resources that you're mining, because the way we set these things up, you mine the high grades first and the stuff that's closest to the infrastructure first, and as time goes by, you move away from these infrastructures and into the lower grade areas of the mine, and that's a form of inflation that we refer to as mining inflation, and that's very natural. Most of our job is trying to keep ahead of that in terms of productivity improvements, ahead of that by the application of technology improvements to the processes. And then there is the global commercial inflation that happens. Now that tends to come up bite really hard in terms of the input costs, things like diesel, reagents, etc. But to the extent that eventually falls away, there's a little bit of elasticity into that. And so that's the one that if it's peaked and starting to come down, we will start to see some relief of pressure to that. But what we don't get the relief of is the mining inflation side of that equation.
Good morning to you, Duncan. Can I ask you about iron ore and the Brazil operations? You're doing a deal, it seems, with Vale this morning. Some people responding to that saying, is this expensive, or asking if this is expensive? Maybe that's their assessment, but others suggesting maybe the synergies that you and Vale can get out of it justify the price. How do you justify the price?
Well, Anna, this is one of those unicorn time of opportunities that you get in mining. It's very difficult to rarely get proper industrial synergies in mining, where you either share a resource in the likes of an ore body or resources in terms of infrastructure. And this is exactly what you have here in terms of this arrangement that we've concluded with Vale. We have an operating mine full of infrastructure. They have a resource, the quality of which is better than the resource that we're mining on as it stands today. The combination of these two means that over time, we get a better product for a much longer life of mine at a much lower capital cost. And I think that on that basis, it's a hugely value accretive deal for both of the parties. On top of that, given the size and the nature of the combined deposits now, we also have the potential for expansion opportunity in what is going to be one of the most richly sought after commodities, high quality pellet feed iron ore, which is going to be absolutely crucial in clean steel making in the future.
Okay. Duncan, some people going into these numbers had been talking to me about how, this is a business, you shocked the markets, quite frankly, at the end of last year with some of your production statements. You sound more confident on those now. But a business that has some debts and might be looking to sell assets to deal with that. But that doesn't seem to be where your thinking is at this point.
No, that's not true. I mean, we're in the process of reviewing, our portfolio from top to bottom. A very clear understanding of every asset. I did say in December, every asset in the portfolio has a clear role to play, and it must play that role effectively through the cycle. It can't be a really good asset just at the top of a cycle. Got to be an asset that can certainly wash its face at the bottom of the cycle. So that's a review in terms of the new mining plans that we're starting to put in place that's happening throughout the business. But at the same time, my second priority, which is making sure that we have a portfolio that is robust and absolutely value accretive at all times in the cycle, is very important. But we cannot take our eye off growth. Although that's the third priority, the idea that these assets are really scarce resources, and we have the capability to develop them at the right time for the right value. It's very important to have them in the portfolio. So you shouldn't read anything that's counter the optimization of the portfolio into that.